So, Sarah, the barn door at the Fed is wide open and everything is out. The horses are running faster and faster. Really, all the tools and some more to come have been deployed. And essentially what Chairman Powell is saying is that he is going to do whatever it takes to actually get this economy moving again. Now, of course, we know that the tools that he has are really tools that work through financial markets, that he can't do anything about getting a vaccine. He can't do anything about the flat economic activity that we're seeing, the number of unemployment claims. All of that is much cause for concern. That said, you see him doing really quite a bit. He's got us at the zero lower bound. He has expanded quantitative easing in a way that, of course, has no time limit. It has no duration. It has essentially an open-ended quality to it. And then, of course, we've got these major Fed liquidity facilities. They are all out and they are standing up now, and they are essentially, the faucets are turned on high. So essentially, you see quite a bit here. More to come, I think, in terms of the Main Street lending program. We'll also probably see more in terms of the municipal bond facility. But you can see him moving all of these different parts and doing things really to an extent that is fairly extraordinary and, of course, unprecedented.
Paul, clearly the Fed chair said he's willing to deliver more if necessary. But what portion of his available levers has he already pulled? Are we talking 90% or 50%? Is there much ammunition left?
I think he's pulled pretty much everything that he can. And I would certainly agree with Sarah that he's willing to do it with all the vigor he possibly can display. The important thing that he brought out, though, and I think it's really important to pound the table about this, is that there are limits to the Fed's power. The Fed is not a fiscal authority. The Fed's in the lending business, and they can lend against anything that they deem to be good collateral, and they can be incredibly liberal in that definition, but they're not in the grant-making business. And to the extent this economy needs to have grants from the government to households, to business, to state and locals, that has to come through Congress. And I think Sarah noted when he talked about the great fiscal power of the United States, and he was openly calling on the fiscal authority to give him some equity in order to be able to take more risks. So I think he did a really good job of saying, A, we're doing everything we possibly can, but B, there are limits to what we can do, and Congress should use its great fiscal power, that this great Bank of Uncle Sam that's been created, which is a joint venture between the Fed and the Treasury, needs to have more taxpayer dollars for grants and loss absorption.
You know, Sarah Bloom Raskin, this is an issue I know that you're sensitive about because you were at the Fed during the last crisis where, there were questions about who got bailed out and who got relief and what QE did and who it helped and who it didn't. Already, we're in an environment where we're sort of wondering if there's a Main Street versus Wall Street thing happening, whether the big companies that the Fed is lending to and the markets that the Fed has propped up is disproportionately helping the haves instead of the have-nots. I think Powell was careful to sort of explain today why his policies, for instance, to help the credit market, help cushion the economic shock that would hurt people at the very bottom of the income scale. But is the Fed going to have a bigger problem here when it comes to the unprecedented size of this package and just who it's aimed at?
I think you're right, Sarah, and thank you for remembering history here in terms of what was done during the financial crisis, which many people will remember did cause quite a bit of political backlash. Now, I'm not feeling essentially the full political backlash at this moment, but you do see signs that it's starting to build, and it's precisely for the reasons that you're pointing out. The Fed is engaged in massive amounts of massive amounts of relief here, and there's different speeds at which this relief is coming out. I think the relief coming from the Fed is on one speed, but there's other relief coming through Treasury, the Small Business Administration, other agencies of the executive branch, and that relief is hitting all kinds of speed bumps and friction points. And that's an issue because the speed with which this relief hits, I think, is going to affect the contours of what our economic recovery looks like when this pandemic is over. So there are definitely differential speeds here coming out in terms of if you think of the water, right? The water in the faucet. I mean, some of the pipes are clogged and some of the pipes are moving pretty smoothly and moving the relief to where it needs to be. But ultimately, the bigger point here is that the Fed can only do so much. Yes, it is an extraordinarily powerful mechanism, and yet it works through financial markets. Ultimately, it is not a good mechanism for actually targeting particular small businesses, particular households. So the ability of the Fed mechanisms to actually reach the real economy is still something that we're going to have to see. And to the extent we don't see it or that it's late in coming, I can guarantee you that there will be a political backlash here. The other thing to keep in mind, of course, is capital markets, right? This has been a failure, really, of capital markets, not just financial firms. And so you wonder, too, at the end of all of this, whether the backlash is going to take the form of some kind of regulatory response, because, of course, the Fed is now working in markets that it does not directly regulate. It is buying bonds, propping up different parts of the market where it does not have explicit oversight. And so we'll have to see whether there's a call for some kind of regulatory oversight when this is all over.